And that's why you're a welcome guest on our program, because not only do you have the macro watch, but you live outside of America. You're an American, and you can watch and see the insanity going on all over the world. So I have a couple of quick questions. You live in Thailand. What do you know about the Chinese economy? You know, they had those empty cities and all this stuff, and we hear in the States that the Chinese economy is hurting. What do you know for sure?
Yes, so I've been following China very closely at the macro level for a couple of decades already. And it is true, China's economy is in a very serious crisis, but that doesn't mean it's going to collapse tomorrow and completely disappear. That's certainly not the case. But their economy was driven by two main things. The first, by exporting more and more to America primarily, so export-led growth. And secondly, by building literally millions of high-rise buildings. And now they've gotten to the point where both of these growth drivers are just slamming into a brick wall. America's not going to take any more of their goods, so the U.S. is putting up higher trade tariffs. So China's exports to the U.S. are beginning to fall. And at the same time, they have such an extraordinary property glut over there. They say that, people are saying that they probably have 2 apartment units for every person in China. So they don't need to build any more apartment units. The prices of the apartments are dropping, and that's where people store their wealth. So they say that $19 trillion of wealth has been destroyed in China because of falling property prices. But it goes so much deeper than that, because for so long, so many buildings were being built, and that required lots of construction workers, lots of cement and steel and tile. And so all of those industries expanded exponentially. And now they're all just crashing because there's no need to build any more buildings. And finally, to put the icing on the cake, China's population is shrinking. They have absolutely catastrophic demographics. By the middle of this century, there will be somewhere like 150 million fewer Chinese people than there are now. And by the end of this century, 150 million fewer Chinese by 2050. And by the end of the century, there are going to be 500 fewer million Chinese people, just because they had a one-child policy for so long. Now they've loosened that up, but people don't want to have any children. And so their population is just crashing. So they're stuck with this massive excess supply of property, falling property prices. No one wants to buy their exports anymore because China's destroying everyone else's manufacturing bases by subsidizing their own products and selling them cheaply. And so trade tariffs are going up all around the world against Chinese goods. And so China's economy is just going to stop growing altogether. They'll be lucky if what happened to Japan happens to China. That's the best case. What happened to Japan is in 1990, their bubble popped, and they haven't grown at all since 1990. And if China just stops growing and doesn't grow at all for the next 30 years, they'll be very lucky. It's probably going to be a much harder landing than that.
Okay. Well, so let me get the whole world to cover here. Again, Richard, he's my man, because Richard Duncan, he has macro watch and he sees the whole world. But what I like about him, he's an American living in Thailand. And so he's not jaded by the American press here, but you have your own problems there. But when I look at Germany, I saw this picture in The Economist. They had the German economy on the back of a truck, and it was Europe was crashing because Volkswagen is closing plants and all this. The car industry is dropping, and then I guess I think, I could be wrong. Germany tried to go woke. They went. They got rid of nuclear and all this other stuff, and then their cost of energy went up and all this. So it's Germany, which is the engine, in my opinion, I'm not an economist like you. Germany has been the engine of Europe. What's happening to Germany and France now? What's happening there?
So Germany in particular is in serious trouble too. They used to be the strongest economy in Europe, and now they're one of the weakest. They made the big mistake of relying on Russian oil and Russian gas. And now that the Ukraine war is underway, they've been cut off from all of that cheap Russian gas. And so now they have to buy expensive imported energy. And that makes all of their manufacturing operations much less profitable or very much less competitive than before. And at the same time, Germany relied very heavily on exporting to China. But now China is starting to export to Germany. Germany used to sell China a lot of Mercedes, Benz, and BMWs and all of their other cars, and made a lot of money that way. But now the Chinese cars are so good. China has developed these electric cars that are the best in the world and the cheapest. And so not only are the Germans not able to sell their goods in China anymore, but now the Chinese are selling all of their cars in Germany and all of their other cheap products. And if Germany doesn't put up trade barriers to keep them out, there aren't going to be any more German car manufacturers left in a few years' time. So Germany is going to have to put up trade tariffs against China as well. So, and Germany also has a declining population, although it's nothing as severe as China's. So Germany is facing very, very hard economic times as well.
So what's happening to Jolly England? I mean, they tried to sell their guilds. A guild is a bond, I guess, right?
That's right. It's a government bond. Yes.
So what's happening in Jolly England?
Well, they decided to leave the European Union, and so their export economy is quite bad. And all of the inexpensive labor who used to come and work in England from Poland, for instance, they've all gone home. So wages are high, and this has been inflationary. And their government debt has gone up very sharply, and people are reluctant now to continue buying English government bonds. So just in the last couple of weeks, the yield on government bonds has shot up to the highest level in decades. And people are afraid that they're about to have another debt crisis the way that they did at the end of 2022. At that time, yields on their government bonds shot up so much that the Bank of England had to jump in again and start creating money and buying government bonds and pushing up their price and holding down their yields just so that they wouldn't have a complete meltdown. And so there's really quite a bit of concern that that's possibly going to happen again, although it doesn't seem as severe this time as it was a couple of years ago. But their economy is very weak. They've hardly grown since COVID, despite much higher levels of government debt. And there are no clear growth drivers for them in the future.
And so when the last year, being an American living in Thailand and an economist, what is your view on the American economy?
Well, so the American economy has been extremely strong in the last couple of years. But the reason is that the government budget deficits have been so large. First we had the stimulus during COVID. Government debt jumped about $5 trillion in the first couple of years of COVID. And the Fed created $5 trillion of paper money out of thin air to finance that government borrowing. That was a massive jolt of stimulus, but it didn't stop there. Even after COVID was over, the budget deficit has been $2 trillion a year for the last 2 years. And this has had an extraordinary impact on pushing up the stock market and housing prices.
Let me ask this question, because you're the economist, I'm not. Is U.S. economy strong because they printed so much money?
The U.S. economy is strong now because they printed a lot of money and because the government borrowed a lot of money and spent it. And that made the stock market go up.
Right.
So over the last 5 years, the wealth in the United States has increased by $50 trillion in 5 years. That was a 40% increase in wealth. $50 trillion in wealth. The whole national debt, the government debt's only $36 trillion. So wealth in 5 years has increased by enough to pay off the entire government debt with $16 trillion left over. But the problem is it's a bubble. The asset prices are very high. Their PE multiples, the wealth to income ratio, everything is very inflated. And if they start spending less government money and trying to reduce the government debt, that's going to pop the bubble. So if DOGE, the Department of Government Efficiency, if it does succeed and cut government spending, then it's going to hurl the U.S. economy into a severe recession that's probably going to cause a big stock market sell-off. And that may force the Fed to jump back in and start printing money again to push things back up, as they normally do in crises.
I have tremendous respect for Richard because his macro watch, I would subscribe to macro watch because Richard is unbiased. He just sees the world as he sees it through an economist's eyes. But when we come back, we're going to take a break. But every time I've had Richard at one of my seminars to speak, I had to put people on suicide watch. But being a pessimist like I am, I always see bad news as good news. What can a person do?